It's Friday, December 15th, and I wanted to go over today my little strategy here and how I made this trade that you can see, well, can't see. Hold on. This trade. This was a supply zone or a distribution order, as you can call it in Wyckoff. This was a supply zone that I took entry off of, and I targeted this level of liquidity here. We had the double bottom here, and then and so the reason why I got into this trade is, as you can see, the market structure here, we have, let's say, a low, a high, a low, a high, blah blah blah, forming downward structure. And if we zoom out here on a higher time frame, I used the 1 hour, zoomed out, and I noticed, okay, currently we are a down structure, and this is how I do my smart money. We are currently down structure because we have a low, and we have a previous high, a previous lower high, and a previous higher high. And this is how I make usually, this is the confirmation I use for structure: two lows, two highs. And what I did notice, it came ahead of time to this previous supply zone, and then it reversed off of there, breaking sorry about that, guys, all that fucking noise, breaking structure right there from this zone. And then we had structure continuing to go down. And this is, again, a reason why I like to use a higher time frame. And again, check this out. If you go to the 4 hour, what I did not notice is this is actually a bottom of a long-term bullish structure. And the 4 hour is what I use for that. And so, if we notice here, we have a demand zone right here. And that was initially my target, but I took profit early here on the 5 minute. And usually I will use, since this is GJ for Japan, for Japanese yen, I usually, with pairs containing the Japanese yen, I will use the 5 minute chart, 5 minute to the 15-minute chart, because for Japan moves really slow, and the 1 hour can be really slow sometimes. So this was a trade I taken today, and I just wanted to share this with you guys. And basically, there's the specific zone in the time frame that I took. I want you guys to see it more in depth. So it was here. We had a little bit of a redistribution here. If you don't know what that means, we can study Wyckoff. It's basically how the market moves, because the market never moves just straight down or straight up. It goes sideways. It goes up, sideways, up, and down, sideways, down. There's always a consolidation. And so basically this was a consolidation zone. And if you look really closely here, we did have a breakout right there of that liquidity. And most people would have probably targeted this zone here, this little gap here, this imbalance gap. But I wanted to target this because this was an order block here, which this was a stronger demand zone for me. And I also had volume confirmation too that clearly shows me here. I don't use volume divergence on low time frames. I use it on higher time frames, the 15-minute and up. This was on the 3 minute to the 5 minute. So I look for volume. I look at the ascending and ascending volume. So what that means is, since my bias is that it will move downwards, the market will move downwards. I want the volume, for example, I would want the black volume bars, as you can see down here, to be ascending upwards. And as you can see from this point here, over here previously, this was from here to here, the selling volume has been ascending upwards. And that means, most people are like, oh, that means the market's going to reverse. Yes, I do. That's volume divergence. I use it on the higher time frame, like I said. Since we're on a low time frame and it's not as trustworthy, I use volume a different way on the low time frame, and that's ascending and descending volume. So this is showing us that we are currently stronger on the sell side, because we have ascending black volume candles, ascending volume, and volume is just how much capital is backed by what you see here on the display. This is all the supply and demand and economics. But yeah, guys, all I did, that's the steps you need. Number one, market structure. Step number one, market structure. Step number two, you want to find your supply and demand zone. So if you look here, you can see the yellow structure right here. So this yellow I drew out here would say this was my market structure, okay. And previously, let's say on the top zone, because you want to sell on the top instead of the bottom. If you premium discount, if you don't know what that is, you don't want to sell anything on the bottom, because that's dumb. Because you want to sell things when they're at a premium price rather than a discount price. Discount price would be when you want to buy something in the market, and you want to buy once it's on the bottom of the range, like down here. But we're selling, so we're looking to sell at a premium price. And so another confirmation that made me believe that this was going well is because once I entered here, I noticed that we had a wick tap into my supply zone here, right over here. You see, right over here. And that, for me personally, is a confirmation because smart money will usually do that. Smart money likes to tap and go, because retailers don't usually make these tap and go movements like this and can't control wicks like that. So that's another confirmation. But yeah, guys, that's all I do is I trade with the banks and institutions because that's smart money in the Forex market. And in the crypto ones, we'll talk about that. But for now, this is a Forex video. So me following market structure would be an example of me following the banks and institutions here, because the banks and institutions control the market, right? And they have the most capital. And so what would that mean? That would mean we need to follow the correct market structure, because they control the markets and they move the markets through news, and then that creates market structure because the news creates unhealthy price action. And what I mean by that is movements like straight upward movements or movements like straight downward movements. Okay, and that creates market structure, and that accelerates the speed of market structure, as you can see in all of this, which was created by some news. All this unhealthy price action with the black candles and the white candles, this was all created by real-time, real economic data and real news. And a quick thing I want to tell you guys for news to help you guys out is a good thing that I like to do is I like to use Forex Factory, and I have it only on medium and high impact news. And then, so basically, what I mean by that is I look for setups based off of the news that's coming up. So, for example, today was Friday, so I looked for Euro pairs and GBP pairs, and that was the whole reason why I got into this trade, because there was GBP news, and that affects the market. So, yeah, so that affected my trade, and I was like, okay, so there's GBP news, that means blah blah blah, and who controls? Yeah, you kind of get the gist. But yeah, guys, if you want to ask me any questions, my Instagram is there. You can just DM me, message me, whatever you want. Show me your setup. Show me how you're personally doing in your trading journey. I don't have any courses or anything like that. I have a trading Discord with my strategy inside of there. But yeah, guys, just communicate with me and connect with me. I hope this video was helpful. This was just a little bit of supply and demand strategy here. So number one, identify a market structure, and you can do that on the 1 hour to 30-minute when you're a beginner, or if you're a seasonal trader, and then look for your demand zones, like your imbalance, your fair value gaps, and your order blocks like we had here for my trade. And then you can even screenshot this if you need. But yeah, guys, thanks for watching the video. Peace.